Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Hormaz Fatakia. Well, midcaps are doing well today. We have seen a sharp recovery from the lows. We'll have to see whether we build on to these gains or not. For now, Nifty is above the 23,400 mark. We had broken the 200-day moving average as well. But Bank Nifty also seeing some recovery. The last one are very crucial.
It's a tug of war, right, between the banks and the IT index as of now, and some very important levels to watch out for. A close above the 200 DMA is going to be extremely important for the Nifty, so we'll keep an eye out on the last couple of hours. But let's take a look at the top headlines that we are tracking on the show this afternoon. Stocks slip in a volatile start, but the market recovers from the day's low, led by metals and the auto sector. IT and energy remain the key drags.
Stocks of city gas distributors slump after nodal agency GAIL cuts gas allocation by 20%. This is expected to lead to significantly higher gas sourcing costs for distributors.
Honasa Consumer is locked in a 20% lower circuit, and it's now slipped below its IPO price after a decline in sales led to losses in the September quarter. The disruption following its distribution model change is a key factor behind the weak show.
Crompton Greaves Consumer surges in trade after reporting strong Q2 numbers. EBITDA margins boosted by improvement in Butterfly and steady margins in the ECD segment. Okay, those are the top headlines. As Hormaz was mentioning, it's a tug of war between the IT index and the banking index right now. Even the metals are contributing to the gains that we are seeing from the lows. So good going there, 2.5% higher on the metal index. There is a recovery that we are seeing on the Nifty that is sold off a little bit. But we'll continue to see which way things go. The mid-cap index also has come from the highs in the last couple of minutes. So the index is up around 81 points. But there is a lot to talk about on the show today.
Indeed. And it's the recovery that we've seen in the broader markets as well. So the recovery is being led by some of the beaten down sectors, be it auto, FMCG, PSU banks. All of them have corrected at least 15 to 20% from their respective peaks. And they are leading the recovery, barring the metals index, of course, which is up 3%. But some movers then from the broader markets, and we have Vamakshi to take us through those movers. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Lots of stock-specific action in the trading session today. Let's first look at some of the top losers. The obvious ones are IGL as well as Gujarat Gas on account of the government lowering the APM gas allocation. Both of these stocks are down and out in trade today. Honasa is another one that is reacting to a weak set of Q2 numbers and has fallen below its IPO price. Nugent Software is another one, down nearly 13%. And in fact, it has dropped the most in the last 3 years. And this fall is coming on the back of strong volumes as well. Bayer Crop has touched a 5-month intraday low. Hitachi Energy is another stock that is down and out, and Bharat Dynamics has hit a 6-month intraday low today. But apart from that, on the flip side, we have a lot of stocks that are gaining momentum in the trading session today. That includes Swan Energy, which is up nearly 7%. Muthoot Finance, again reacting to its numbers. The stock is up nearly 7.5%. Aegis Logistics as well as Suzlon Energy are some of the other big movers. But apart from that, we also have some metal names like Nalco and Vedanta in focus today. In fact, Nalco is seeing the biggest intraday advance since June 5, and Vedanta too is seeing the biggest intraday advance since June 20th. Lastly, let's also focus on some of the stocks that are gaining on the back of some very strong volumes. Crompton Greaves, again, good numbers out here. Analysts have upgraded the stock. Crompton Greaves is up nearly 4%. Avanti Feeds also reacting to numbers. Godrej Industries as well as Sammaan Capital too up in trade today.
Oh, okay. All right, Vamakshi. Thank you so much for joining in. So those are the mid-cap movers. But we'll slip into a short break. Management of Balaji Mines will join in next to discuss their Q2 numbers and the way forward. Stay tuned. Welcome back. You're still tuned into Midcap Radar. Balaji Mines posted a good set of Q2 earnings with margins expanding and EBITDA too growing 14% on a YOY basis. We are now joined by D. Ram Reddy, the Managing Director at Balaji Mines. Mr. Reddy, good afternoon. Thank you so much for joining in. You know, volumes have declined in Q2 by 6%, but first half volumes have been flat. Can you give us a guidance of what will FY25 look like in terms of volumes? Are you seeing pricing increase as well, which has come back across segments?
See, if you see the volume growth, there's about 6 to 7% growth on the standalone basis. And even the EBITDAs also have been improved year-on-year basis. If you see the EBITDAs were about 16%, now it is 19 plus. And we aim by the end of the year, the volume growth should be around 10 to 12%, and even EBITDA should be between 18 to 22%. And prices were down for the earlier quarters. Now we expect the coming quarters the prices should improve, whereby you will see the revenue growth as well as in the volume growth and even the bottom line growth also.
So, Mr. Reddy, good afternoon. Thank you for joining in. With all that you just mentioned that you're expecting a better second half, do you stick to your FY25 revenue guidance of around 2,000 crores and for FY26 as well, since you mentioned that you will be 3,000 crores in FY26 with a 24% margin? Do you stick to that number since the first half you have done only 730?
If the prices improves, definitely we will go that. But with the current pricing, I can say the standalone basis it will be 13 to 1400 crores. On the consolidated basis, it may go to around 18 to 1900 basis.
Okay, so if pricing increases, then it will be 2,000 crore rupees, otherwise 1,800 to 1,900 crore rupees. This despite the fact that Metal Mines plant has been commissioned this year itself, Mr. Reddy. And what happens to FY26?
Yeah, see, Metal Mines, we have come with a big capacity. It is just commissioned. You cannot take it into the account immediately. It may take some time to come to the optimum levels of the capacity utilization. We have increased from the current 48,000 metric tons per annum to 88,000 tons. We are absorbing the 100%, that is for 48 to 88,000, it will take some time. So we can say in the coming years, what I said in the 26, 27, definitely considering these capacities, you see, we have many plants on table with very good capacities. We are just waiting for the time, the improvement in the market. The moment the market improves, we are ready with all the capacities. Definitely we will go across this 3,000 crores, what we said earlier.
You know, since you mentioned capacities, Mr. Reddy, your existing DMC plant is also under upgradation and by adding additional equipment as well, right, for manufacture of electronic grade DMCs. Now, what is the how big is this opportunity, if you could tell us that? What's the market size and when will this start to reflect in your financials?
The good thing is the EV, actually, the DMC was meant for the electronic vehicle battery manufacturing parties. But those manufacturing EV battery manufacturing, they have not taken at any start. Everybody is talking, but nobody has started as of now. Somebody said that November, but I still expect in the next year only. The moment they start, we are ready with our raw material manufacturing. We are waiting for the EV battery manufacturers to start. And it's very difficult to say how much, what will happen, because until otherwise they start, we cannot see how much I will sell to them.
Okay. So what is the total capex, Mr. Reddy? Your press release talks about a lot more chemicals, a lot more expansion plans that you have in place. What is the capex you'll be putting in? How will you be funding it? What is the generic asset turnover on such investments?
See, in the parent company, in Balaji Mines, we'll be doing about 250 crores for the manufacturing of these after methylamine, the dimethyl ether and propylene glycol pharma grade and also N-methyl morpholine. For these, all these things around 250 crores we are doing, which we will be doing from the internal accruals. And in the subsidiary end, because you have seen whatever the downstream because of the subsidiary is not doing well, for that we have done remedy. Existing plant, we are doing the modifications for manufacturing of some valued products like data and piperazine. Along with that, we have planned 750 crores investment in that subsidiary, that is Balaji Specialty Chemicals, where we are going with the cyanide-based products, which are all first time in the country, second in the country, which may come a year's time. From now, you can take 1 year's time to commence those products in the subsidiary. And that's the reason I am confident that 3,400 crores on consolidated basis from the 26-27, we are assuming that these expansion will come into the commencement of the cyanide-based products.
And what will the total, how will you be funding this, Mr. Reddy? So you said internal accruals, yeah.
Mostly internal accruals, maybe end of the expansion out of 750 crores, maybe 250 crores, we may need some borrowing from the banks.
All right, Mr. Reddy, thank you so much for spending time and taking us through the quarter gone by. Wish you good luck for the rest of the year as well. That was the management of Balaji Mines, sticking to the revenue guidance of 2,000 crore, provided prices improve in the second half. Time for a short break. On the other side, we'll be joined by AK Tiwari, who is a member of the PNGRB, to discuss the impact of the government's decision to cut APM gas allocations by 20% yet again. Stay tuned.
Welcome back. Let's address the big story of the day. City gas companies of stocks of IGL, MGL and Gujarat Gas, they are seeing deep cuts. The government has lowered the APM gas allocation by 20%, marking the second straight month of allocation cuts. To discuss the impact and what could the way forward be, we have with us Mr. AK Tiwari, the member of PNGRB, joining us now. Mr. Tiwari, good afternoon. Thank you so much for joining in. And you know, this is the second consecutive cut in APM gas allocation that we are seeing. Can you give us a sense of what really happened? Why is government going for these steep cuts, if there is any discussion on the same? And do you think there'll be further cuts and it could go as low as zero in terms of APM gas allocation to these companies?
Thank you. Good afternoon to everybody. First of all, I would like to say that this APM allocation, particularly APM domestic allocation, is being done by the MOPNG, but the 2 or 3 reasons are there. Number one, the domestic production, APM domestic production are not increasing, number one. Number two, we have authorized 307 geographical areas where the PNG and CNG consumptions and their penetration are increasing. So these are the two major reasons. Besides the prioritizing the other allocation by the government, this way the cut is there, and this will be the reality, because whenever the consumption will increase in all the geographical areas, these APM which are limited in production, so these will come in days to come.
Has this ever happened, Mr. Tiwari, that the allocation has been zero to city gas distribution companies? Because that has been the priority sector, right? Do you think that's also a possibility?
No, it has not been zero, because where the PNG connections are there, 100%, 105% allocation is there. It is only cut in the CNG. So that I would like to say one thing, that we have authorized 307 geographical areas, and these 300 geographical areas can be bifurcated into the 4 categories. Matured, where the more than 90% of the PNG connections and CNG obviously is there, and pipeline inch kilometer has been completed. So these are the matured GAs, which are around 100 in numbers. There are the geographical areas which are developing, means around 58 geographical areas. We can assume that around 50% of the PNG and 50% of the inch kilometer has been completed. So that we can say is the developing. Rest are the project at the project stage are not started on the 11th and 12th round. So what I need to say that the allocation of gas needs to be prioritized in this way, developing, matured at the project stage as well as non-starter. If this allocation could be prioritized, so the allocation of gas and the new GAs to whom we have authorized in the 9th, 10th and 11th round could speed up their progress.
Mr. Tiwari, good afternoon. Two-part question. So what happens next? Do you see a further reduction in allocation from the current levels that there are? And part two of my question is, what do the city gas distributors do now to make up for this cut in allocation? Is there enough high pressure, high temperature and gas from the new fields which is available for them?
See, this priority of allocation is being done by Ministry of MOPNG. So I can't comment on that. But yes, reality is there where 307 geographical areas are working, and a portfolio needs to be mixed and find out by the entities who are matured and who are developing to have more and more portfolio of LNG mixing in their gas consumption.
So, Mr. Tiwari, we had your colleague back with us in March, where there were comments made by Mr. Puri, where he suggested that these city gas distribution companies are making record high margins, and that's why they need to tone it down a little bit. Do you think this is also what the government is trying to attempt now? Because if I look at the numbers, IGL profit margins for the last 4 years are 15 to 16%. MGL is 19 to 20% only in the last 2 years. Is there a reasonable level with the industry thinks the margins should be at? Have you had any word with the government around this?
We don't have any word with them, but I would like to say that if we, as I have told, that if you categorize this geographical area of 307, you will find that even at the IGL or MGL, there are many geographical areas. If you see the profitability of there, the profitability is not there, may not be there to that extent. So, profit making is one of the objectives, but at the same time, these are to be categorized. New geographical areas where we have awarded 11th, 12th round as well as 9th and 10th round may not be making profit also. So it's not that every company is making profit. There are 40 odd entities who are working, and profitability may not be there to the extent as you have told in case of IGL and MGL. That may be exception. But there are other companies who are not making profit because they are at the instant stage and they are at the developmental stage, they are at the project stage and non-starter also. So I think this sector needs to be supported, not only viewing the profitability of one or two companies. In totality, these are to be seen.
All right, Mr. Tiwari, thank you so much for spending time and joining us to take us through your views on this issue of the gas allocation company to the city gas distributors that has hurt the stocks of all the three companies, IGL, MGL and Gujarat Gas, as you can see on your screen. But with that, it's a wrap on this edition of Midcap Radar from Sonal, me and the team that put this show together. Thank you so much for watching. Your Stocks comes up next.